Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. Big earnings report from Enphase Energy after the market closed on Thursday. I have gone through the conference call, the earnings report. The market's reaction is not positive. Stock is down about 16% as I'm recording early on Friday morning, but there were both positives and negatives in this report. I want to remind investors that a stock price movement is not the same as how a business is doing. So I want to disentangle those two things. I'm going to do that a little bit in this video, talk about both the strengths and weaknesses in the business, and then the stock market's reaction, because I think the big takeaway over the last year or so with Enphase Energy is this is a stock that was priced for massive growth, and we now have a company that is not a massive growth company. It's maybe even declining in revenue. We can still have a great company and have a terrible stock performance. Two very different things. But that's something I'm going to get to a little bit later. My name is Travis Hoyam. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video's sponsor, The Motley Fool. Check out fool.com/ASYM for their top 10 stocks to buy right now. And before I get started, I've done a lot of coverage on Enphase in the past. I'm going to put some links to those videos in the show notes. So if you want to go back and look at some of my coverage over the last few months and a little bit more background on the company and how I was thinking about it before this earnings report, you can check those out there. But for today, I want to start with the earnings report. This is the report for the third quarter of 2023. If we were just looking at the third quarter, the numbers are not great, but not terrible. So let's start here. Quarterly revenue, $551 million. Gross margin, 47.5%. That includes benefit from the IRA, the policy that gives Enphase Energy a subsidy for producing some of its products in the US. Operating expenses down a little bit from a quarter ago, $144 million. So that's really positive. If revenue is coming down and you're able to cut both cost of goods sold and operating expenses, that's really good news for Enphase to be able to control those costs. Net income, $114 million, and earnings per share is 80 cents. If you're an investor, you might say, okay, that's not great, but we are in a weak point for the solar industry. We've heard that from a number of manufacturers, from installers. So while I would like numbers to be better, still a very profitable company, generating cash, great margins. Here's the problem. This is the guidance for the fourth quarter. Revenue is expected to go down to $300 to $350 million. Gross margin without the IRA would be 38 to 41%. So that's much lower than we've seen in the past. And operating expenses of $146 million. So depending on where revenue comes in, it is very possible that Enphase Energy will lose money in the fourth quarter of 2023. So that's where things get really surprising for investors. The deterioration of this business has just happened extremely quickly. Remember, if we go back up to the numbers here, as recently as last quarter, Q2 2023 revenue was $711 million. Now we're expecting less than half of that just 2 quarters later in the fourth quarter of 2023. Management also said that a lot of these headwinds that they're facing in the fourth quarter would continue in the first quarter of 2024. They're seeing some possibilities for growth in the far out future, so middle of 2024, but it's not going to happen for at least 2 quarters. So this is the biggest reason that the stock is selling off. But this is also what I want to give some context to. Now, there are 2 major impacts on the solar industry over the last year. One is rising interest rates. There's absolutely no doubt that rising interest rates are making it harder to finance solar projects. The way that most solar systems are built is you sign a contract to pay for electricity or pay some sort of lease over the course of 20 or 30 years. So you're basically taking out what's equivalent to a mortgage for your solar installation. So if you have a $30,000 solar installation, the installer takes some of those tax incentives, goes and sells those, and then their upside is in collecting a monthly bill from you for paying for that solar installation. The problem when interest rates goes up is the further out those payments go, the less valuable they are. So just like a mortgage, price of the system can stay the same, but the monthly cost goes up. So now installers are in a situation where they either need to raise the prices, the monthly charge that they're charging customers, or they need to lower their costs. And it takes a while for that to move through the system. What we've seen in response is actually installations are down as installers kind of try to figure this out and go through this balancing act. the industry is not dying, but it's definitely down from where it was 6 months or even a year ago. The second big impact is net energy metering 3.0 in California. California has gone through a number of different structures for net metering. It's not traditional net metering where you can just send electricity back and forth from the grid and you only pay for the net electricity that you use. There's now time of use prices. There's different payments for what you're sending to the grid versus what you're using from the grid. It's a very complicated system now. And this is why the economics now move towards batteries making more sense in California. So if you're an installer or you're a company like Enphase, the upside in California is that long term, it will make more sense for Enphase to not only sell microinverters, but also microinverters and a battery to solar installers. The problem is the payment or the effective payment that you're getting from that net metering is lower than it was previously. And now your installations have gone up because you've added a battery. So when net metering 3.0 kicked into effect earlier this year, it just destroyed the market. Now, as has happened before in California, this will get figured out. But in the short term, installers are facing a lot of pressure. Now, one of the things before I go too far that I want to mention that will absolutely help the industry long term is these same pressures on the solar industry are hitting the utility industry as well. Costs are rising, interest rates are rising, therefore electricity rates are rising. So now the competition for a solar system that's put on somebody's roof is going to be going up in price. And what we've seen reported from the price increases that utilities are asking for, particularly in California, are extremely high. 10 to 20% is not going to be surprising over the next year or two. So that means that these installers are going to be able to raise their prices by 10 to 20% because that's what the competition, the utility is doing. So all of this will eventually balance out, but the impact short term is that fewer residential solar systems make financial sense because of higher interest rates and because of these net metering impacts in California. So that's the lay of the land from an installer perspective. But Enphase is not an installer. Enphase is an equipment supplier. And the impact that they're seeing is that distributors and installers who were expecting a certain amount of installations in late 2023 and into 2024 are expecting fewer installations now. That means that they're reducing not only their purchases, but also their inventory. So management talked about this. There's about $150 million difference between the sell-through or the amount of microinverters and batteries that are going in to actual solar systems and the sales that Enphase Energy has. That is basically these installers and distributors reducing their inventory. They have the product, now they're putting it in the field, but they're not buying another microinverter or battery to replace it in their warehouse. So equipment companies and product companies go through this all the time. You go through a growth phase where a retailer or business like that is growing, building inventory, and that inventory build, not only are you selling the products that actually end up in customers' hand, but you're simply filling the shelves. So that ends up being a benefit when you're growing. When growth stops or even goes negative, like it is right now in the residential solar industry, now suddenly you face the opposite headwind and you have inventories falling. That means that even if installations are flat, your sales are going to be down, at least short term. So that's some of the context of what's going on in the industry. There's a lot of moving parts here. Fundamental business for Enphase Energy did not drop 50% between the second quarter of 2023 and the fourth quarter of 2023, despite the fact that sales for Enphase are falling. Now, what I would worry about as an investor is what we often see in these periods of excess inventory, of falling installations, is you see pricing pressure. So are we going to see gross margins fall? Well, that's exactly what we're seeing at Enphase Energy. Without the IRA, you would see margins in the high 30%, very low 40% range. So we do have that IRA benefit, but pricing is not what you would have expected to see just a few years ago. So I think we are going to see margin impact. Management talked about the fact that batteries are generally a lower margin business. Microinverters have maintained a really high margin, but that's what I would look for going forward. So to be determined what the impact is on margins, but sales I would expect to be pretty weak in the fourth quarter and the first quarter, and then potentially increase in the second and third quarter. What you're going to want to watch is what do companies like Sunnova, SunPower, Sunrun say about their pace of sales and installations. I would expect them to see a drop in installations like what I talked about here, but not the 50% drop that we're talking about in sales for Enphase Energy. They're going to be a little bit less down. But then do they see a ramp up in 2024 in demand when things like higher interest rates are priced in, once utilities start raising rates, and once net metering 3.0 is really figured out for sales staff, for infrastructure, and for financing as well. The last thing is from a stock standpoint, what we're seeing is multiple compression with Enphase Energy. I'm looking at the data right now, and in 2020, the company had an enterprise value to sales multiple of that is pricing in an insane amount of growth. What we've seen is them come back down to an enterprise value to sales multiple of 3.7 right now. That's on a trailing 12-month basis. So a next 12-month basis, probably a little bit higher than that. But that's more in line with where the stock traded in 2019. I don't know if that means that Enphase Energy is a value right now. It's hard to see that. It's hard to see through the ups and downs in revenue, but that's something I'll be looking at over the next few weeks. If you want to follow this channel, I will dive deeper into the valuation of Enphase. But I want investors to keep that in mind. This is the danger in paying very high premiums for companies that are growing, but have the possibility of that growth stalling out. Again, one of the things that I've covered in past videos for Enphase Energy and from the solar industry, we have seen these cycles before. And this is just the biggest down cycle that we've seen from Enphase Energy since it has become such a valuable company. Remember, Enphase has gone through cycles before, so this is not new to the company. Enphase almost went bankrupt in 2016 to 2018, required a lot of cash infusion just to make it through that phase. But now we're in a very different cycle in the company's business, much more sustainable, much more established, but doesn't mean that we aren't going to go through these changes. So hopefully this context was helpful looking at the third quarter results. If you like this video, please give it a thumbs up and share it with anybody you think would be interested. And of course, follow Asymmetric Investing here on YouTube. Love to hear your comments about Enphase Energy because there's a lot going on with this company. But I appreciate you watching, everybody, and I'll see you here next time.